Hello, Warriors. How's everyone doing? Brock, how are you? Shepard, nice to meet you. Sinatra, Sarang. Hi, Scott. Everyone doing okay? Everyone do all right on the Fed? Had a couple of interesting things happen on the Fed. I think at least a short-term low in the Dixie. So I'm the wanted to show you my face since we're on face. So everyone have a great day. I'll see you later. No, I have a few things. I have a few things I want to talk about here. All right, I'm doing pretty good. Let me get rid of me. All right, so Mark Williams is has his pom pom out for cable. Congratulations. That's the other side of the equation of euro pound. So I've been talking about euro pound heading lower that looked vulnerable. I asked Greg about it. Face made for radio. I've heard that for about 25 years. You know that's not true. Anyway, uh, we see this challenging the moving average on this daily here, euro pound. So why is euro pound an important thing even if you don't trade it? It gives you your preferred shorts, right? So I was talking to one of my mentees last night, yesterday, when after the Fed, and he was showing me divergence in cable. Was already short euro, and it looks like cable may have blown it out. Let's see. No, still diverging up here. Be careful, Mark. But since we had diagnosed euro pound as direction being down, that made euro the preferred short. And I'm glad. I bet he's glad he didn't. He chose the euro to be short instead of the pound, which made a new high here. Okay, so that's really the importance of euro pound. I actually, the euro pound up here while euro was making new highs, new high after new high after new high. Euro pound peaked all the way back here. I have to go to a longer TF. It was the 9160 level right here. So all the way through with euro making new highs, euro pound was not confirming that action. And, people have different opinions of it. I believe a true bull market in the dollar is led by euro pound going down, and a true bear market in the dollar is led by euro pound going up with the euro outperforming cable. So it's a very important pair if you're an FX trader, just like Aussie Kiwi is. Where what's your preferred short versus the commodity currencies. So this still looks negative. I think that we're headed to about 87.30 or so. And here we have the dollar turning. We had a decent little divergence here on the Dixie, held held here. So we took out those lows, and um, we had a nice recovery, still sharply lower on the week. But I think the dollar index was 10 and euro was in the 90s. So I'm not talking about a huge bull market, but why can't we rally back to 95.50? Okay, and why can't euro pull back to? I know people are only thinking maybe 116, but maybe even a little deeper. Right now, it looks just like two drives. Maybe there's going to be another one. And I want to welcome all our viewers on investing.com and just want to give you a little bit of a review from last week. I was talking about NASDAQ stocks, the FANGs being under pressure. We're trying to hold here in NASDAQ, and we have big earnings. We'll see if the earnings can bail NASDAQ out for one more attempt up here. But this is very key in S&Ps. We went right to the 2-week off number. It's at 32.21. but we're talking about this possibly being a head and shoulders top, with this being a right shoulder. When Grega was on yesterday, he showed an ABC up here. Then after his appearance, we got that one last push to the 88.6 level. This has been an important level. Here's the neckline for me. Well, 31.98 is a neckline. It could also be considered a descending triangle, something like this. Let me get rid of you guys for a minute. Just draw a line from here to here. Oops. Something like this. There's your descending triangle. So I really don't think that we should take out those highs. We're going to take out 3,300. And actually, I'd be tempted on bullish reports. I think Apple and some of the other FANGs are reporting tonight. So last week, when we were on investing.com, I kind of went through a few of the NASDAQ stocks for you to be aware of. Apple had a good day yesterday. Let's see what happens today. But we were up here, okay, and then we had the big break. It's early this week and trying to recover. So it doesn't look that great to me. Microsoft, same situation, peaked, trying to hold back underneath this level, and we could gap lower. I think the best looking chart last Thursday was Google, was up near the highs, and it was up here, and this too looks like it's rolling over, diverged up here. Okay, so I think you have to be careful. Maybe it's going to be disappointment over the package, the relief package that Congress is fighting over right now. They're fighting over liability. And if they don't get it done by tomorrow, there's going to be a delay in that relief. So, they have about 24 hours before those checks stop coming. So we'll see what happens. That I don't think the market's taking that into consideration, especially a smaller relief package where the HEROES Act was about 3 trillion. Republicans are proposing about 1 trillion. So anyway, these markets look pretty vulnerable to me. There is something called gravity that every once in a while, even comets and meteorites, I still don't see any reason to short gold. Okay. Maybe we head up here one more time. It's gotten a little bit too wild for me. Silver down $1 today. But, I wouldn't be completely surprised if it made another run first. I'm leaving it alone. You have oil finally trying to break down. We'll see if they could hold this level one more time. They've held it. Looks a little bit like the S&P's, kind of a descending triangle. We closed down here. It's not going to be such a great signal. It would take us down to 38.5, just an arithmetic measured move here on crude. And Blake and I have been talking about the inherent strength of USD CAD, of it not being able to make new lows while the dollar was under pressure, could not take this low out. It's having a pretty good day today, up 83 right now. So this is, people that know relationships and correlations and look at the market holistically, they notice these things. It's kind of a market tell. So if Canada USD CAD could not make a new low while the dollar was getting trashed, right? Getting trashed, maybe not done getting trashed, and Canada could not make a new low, as a trader, you ask yourself, well, if the dollar, weak dollar, cannot take it to new low, what would happen if the dollar caught a bid? Here's your answer. Okay, so pretty good day, pretty nice candle. I'd be careful if you're still looking for the low 130s in Canada. I'm not sure what it's going to turn out to be, but 35, 35.70, there could be at least another 100 pips and maybe more. So it was a leader in adverse market conditions for itself during dollar weakness. And if we're going to get a rally in the Dixie, say back to, initially 94.50 and then 550, Canada should perform pretty good. Any questions on anything that I've covered before I turn it over to Blake? Oh, I didn't know I replied.
That was me, Coach.
Oh, okay.
A person was asking if we get the recording, and I said if you go to
yeah.
analytics.com,
Yeah.
you'll find our webinars page.
Oh, okay.
They usually get posted a few hours after they're finished, a couple of hours.
Yeah. Okay. Well, all right. And what? I'm the Ed McMahon of Forex Analytics. I guess that means I'm bringing Johnny Carson in right now. Here's Blake.
Hey, Dale. How's it going?
All right, buddy. If I'm Ed McMahon, you know who you
were
are.
talking about the divergence with the dollar, and it's all about timing. I mean, you could have sat here, I mean, we've been talking about it for the last week and a half, but if you're trying to play the dollar Canadian on the long side for the last week and a half, you just I mean, it's just bleeding, right? But it did bounce today because it is showing you that it is diverging away from other dollar pairs. I'm not 100% sure that the dollar is ready to turn lower. I'm actually more interested in buying the euro dollar at a little lower level. But you can't ignore the fact that the dollar Mexican peso is outperforming. The dollar Canadian is outperforming right now. So that, and it's something that we've been observing, as you pointed out, we've been observing that for the last, several weeks, really, how, the Aussie's breaking into new highs, the Euro's breaking into new highs, so is the cable. But the dollar Canadian has not hit new trend lows, and the dollar Mexican peso has not hit new trend lows. So, of course, the day that you get a dollar pullback, you're going to get these really significant rallies. And that's exactly what happened. When I got up overnight, after, when I got up in, this morning, and I saw the peso, and I'm like, oh my God, that thing ripped. I mean, obviously, we've been talking about it quite a bit, and I just hope no one was short the dollar Mexican peso or the dollar Canadian, because, if you remember our bias chart every day, the Canadian and the peso, we've put in range where all the other pairs have been strongly biased. So we're going to do that this morning, and I want to do it kind of quickly because we do have GDP numbers coming out. Paul Franco is going to be joining us today, which is exciting because most of you don't get to hear him because he is in our chat room and he does the European crossover. And, it's while a lot of you are sleeping, for those of you that are Forex Analytics subscribers, plus you have to be a Forex Analytics subscriber to actually hear his analysis. And so he is going to come on today and give you a little update on what he's seeing. So it'll be a great treat for you before Dale's interview. Dale, who do you have today?
Peter Goodburn.
Peter Goodburn, and he's always a good Elliottician to listen to. We had him at our Traders Summit a couple months back, and he was awesome. So, all right, so let's talk about the euro. Obviously, the 118 level is really acting as big resistance overnight, but the one you have to realize 118.34 is a 618 retracement, and it depends, where you're drawing it from, but it's basically above 118. And I'll tell you what, I had an order overnight to sell the euro dollar at 118.50 because I was hoping we'd get a move above that resistance so I could sell into strength, because the daily sentiment index is pretty extreme, but that obviously didn't happen. So now the question is, how far are we going to pull back here? So I've got to note that the 24% retracement is at 116.77. I believe that will be our first stop on any dip. Okay, 118 is resistance, and remember the path of least resistance is still higher. I know it may come down a little bit, but I'm more interested, like I said earlier, I'm more interested to buy dips than to sell rallies at this point, unless I get a push way up here. Cable's really strong. There's been Dale just pointed this out about the euro sterling, and I'll tell you, this false, and you guys probably heard me yesterday, false breakout leads to a breakdown, and this is a false breakout of a triangle too. So that should lead us below 89, and it's obviously trying to make its way today, and that's something that yesterday we talked about. And so let's go to the cable. So the question is, where's the cable going to stop? And my opinion is right up here. It's going to be 131.57 to 132. That doesn't mean we're going to make it up here in one fell swoop, especially if the euro starts to come down. So the question is here is where is support? So I would be looking at the cable like this right now. Hold on really quick. All right, so I'd be looking at the cable like this. There's our channel. So support today should be at 129.70. We're bullish. And we're probably going up to 130.50. So you just try to buy the dips on a, trade, kind of like this. I would actually even play, just crack through that support, respect the horizontal support, buy it somewhere down there. That's what I would be thinking, for me. Aussie. So the Aussie, we tried to break into new highs. So this is a risk for the Aussie dollar. Let me talk about this for a second. The risk for the Aussie dollar right now is we had a false breakout, and a false breakout above this 71.85, obviously 72 is now resistance, should lead us to a break back down towards here. And then if you look at the hourly bear flag pattern, it seems pretty logical that we start breaking lower. So support for the Aussie is going to be 71.25. And I'm going to write down resistance is 72. It's still bullish, but I'm not. I'll say this like I said yesterday. It's bullish, but I'm not really bullish. I mean, it's bullish. 70 is support, is key support, by the way. I'm bullish, but I'd rather, if I'm going to sell dollars, I'm going to buy the euro, or I'm going to buy the cable. I'm not trading Aussie. I just have to say it's bullish because it's above this, while we're above this breakout point at 70, we have to structurally stay bear or bullish, but like I said, I'm not bullish here. Okay, Kiwi. So the Kiwi, same issue that the Aussie has. We're just kind of we're failing at 67 cents. 66 cents is support. Same stuff as yesterday. You guys should remember that. 66, 67. I have to say it's bullish just because it is still bullish while it's above 66 cents. But if we break, like if the Aussie breaks 70 and the Kiwi breaks 66 cents, then we're going to have to actually flip to range environment, to a range like the dollar Canadian. So here's the dollar Canadian. We held 133.50, 133.30. This is the top of that support zone we talked about yesterday, but it's been there forever, since I think we drew it back, somewhere back here in May, that we've had the support zone. Well, it's still holding, and we're making higher lows. So 133 Well, now that we broke this downtrend line, I would say now support is going to be 133.75. And resistance is going to be 134.40. I think we've written down that number a couple of times this week. Dollar MEX, same situation. We held support at 21.90, and I know we dipped slightly below it to the 78% retracement right here, but that false breakdown, is one of those situations. False breakdown leads to a rally. So 22.25 is resistance. Then big resistance is right here. So 22.40. So let's write down both those numbers. 22.25. But big resistance is 22.40. That's key. We are still in a range environment, but support is going to be, I'm going to write down 21.90, because if we get down to 21.90, I mean, that would be really good support down there. We are still in a range. Swissy is bearish. Dollar Swiss is bearish. We've broken all sorts of support. Okay. The dollar Swiss looks like it's going eventually to 90 cents. So the question is, can we rally a little bit before we head back down there? Sure. So 92 cents is probably resistance, and 91.15 is support, because that's going to be the overnight lows. 15, 92. And let's go over to the dollar yen. Here's the dollar yen. So the dollar yen, you guys probably remember the last couple of days talking about how important the 161% extension was at 104.80. So that's holding. And in my opinion, with the dollar yen, is as long as we're below 106, we're heading down to 104.50, probably down to 103.50. But this here, especially think about like the GDP numbers. Let's say the GDP numbers are slightly better than expected. Like, let's say we only lose 30% of GDP versus 35. I know it sounds crazy, but let's just say that happens. Well, the dollar yen may rally, and then we can look for some place to sell it. So I would think first level resistance is 105.70. Next one is 106.
I'll take it.
What's that?
I would take that.
What's that? 105.70?
Yeah.
Yeah. I mean,
from yesterday's scalp. I mean, counter trend only, Blake. Nothing goes straight up, straight down.
Look, I'd be a seller with the dollar yen up anywhere, close to that. For me personally, I think the dollar yen is on its way to, like I said, 104.50 to 103.50. So today's support though is going to be 104.80, because that's the 161% extension. What's that?
I'm sorry, I'm interrupting you. Longer term, I have targets of 92 in the end.
Yeah, a lot of things have to happen in order for that to happen. I think it's hard for me to try to gauge that type of right now, because I don't have a good handle on what would be the driver from a macro standpoint. The yen's kind of a mystery to me, so I'm
bear market in the dollar. Bear market in the dollar, risk off, correction.
Yeah, but it's like, how does the yen act in that type of environment? I don't know. So anyway, let me finish this up really quick.
2,300.
So here's the dollar index. So the dollar index is below support. Now keep in mind we are below a multi-year trend line that spawns back all the way to 2011. So there's your monthly chart. So this 2011 trend line, we're actually trading through it right now. That doesn't the technical damage is done with the dollar index. Now I don't if it rallies here, that's fine. I'd rather see a rally up to the 94.50 level to sell into, but my bias, as you all know and has been, is just bearish. So support is 93.20. So here's something else I want to show you guys. 93 before I do the US dollar Norwegian krona we have data in 5 minutes, right? Okay, hold on. So here is your DSI, just so you guys can see it from overnight. Gold is at 91, which is extreme. Dollar index at 10, which is extreme. Euro and Swiss franc at 91, which are all extreme as well. So the daily sentiment index is just very, very. The sentiment is super extreme. So you got to be really careful. That's why I think that the dollar is ripe for a bounce. And today could be it. All right, so let's go over to the US dollar Norwegian krona. The US dollar Norwegian krona really bounced off some support here. This is a pretty big channel support, and it came in at 9. You guys know, I think every day we've written down 902, right? You guys probably keep this stuff more than me because I just delete it every day. So I'm sure I wrote 902 yesterday. I'd have to go back and look. And resistance
we believe
is, yeah, 920 now because this is a descending trend line, but it's actually, I'd be more looking at 925, 9.25, and we're in a bearish trend. Okay. All right, let's go look at gold. Gold. So, conversation in the chat room is, when should we buy precious metals next? Look, while we're above 920, this is the all-time high. I think dips will be very well supported. Like even dips below 1920, maybe to 1910. So you just got to look for the dips. Dips towards 1920 is going to be support. Resistance is easy. It's 1980 and 2000, which is the big kahuna, right? We get a foothold above 2000, then we're probably going to 2300, which 23 to 2500 is what I've envisioned for a long time. You guys know that because I use the analogy of we're in 2009 to 2010. Just go look at precious metals, what they did back then. I'm not looking at gold. I'm looking at S&P. Let's go over to the S&P. Really quick, I just want to do this before. 3,200 to 3,300. Nothing's changed, right? Still the same.
Same as it ever was.
And these are both bullish. And while we're above 3,200, there's no reason to be bearish equities. I think I say that every day. Okay. And so there you go. There's your bias chart. It is finished. We have GDP numbers coming in 3 minutes. So here's what Bloomberg has. This is Bloomberg estimate is at 34.5. Okay, so just keep that in mind. I know you might get different stuff from different news sources, but Bloomberg has it at 34.5. Let's take a look at what investing.com has 34.1. So yeah, just I think 34.5 might be it. I am going to be passing it over to Stelios as soon as these numbers come out. I've got to run, but Stelios, good morning. How are you?
Good morning. I am very well. Hello, everybody.
Good morning, Stel.
Yes, we have initial jobless claims as well, which are going to be important. They have been for the past month or two, but GDP is the big one. We have 1 more minute. I have to say that we were all expecting the Fed yesterday. Well, waiting for the Fed to see what they do. They gave us nothing. They did nothing new, nothing really to even write 2 bullet points about. So and interestingly, stocks are falling a little bit after that. Metals are falling. So it's I think we're going to be chopping a little bit until definitely until these numbers now, and then we see. So let's.
If you guys. Hey, Stelios, so this is Data Flash right here at 34.1. If you guys want to see how fast, and Data Flash, remember, comes with Forex Analytics. You want to see how fast the data comes in, fills in through Data Flash, and this is Bloomberg, which is, about $2,500 more a month than what.
Data Flash
that's nothing.
Data Flash can squawk it as well, so you can hear everything.
Yeah, if you turn on the squawk.
It's only 250 pips.
Okay, let's see.
And this is the dollar yen.
There you go.
So you can see
Together,
data
the
filling
jobless
in
claims
came in at the same.
32.9.
So it's better than
Yeah.
expected. Better than expected. Okay. So there we
Still
go.
a terrible number, but yeah, better than expected.
Oh, but you know what? Life is good.
Yeah.
Life is good.
You know what? Paul's
33%
pressers. Paul's pressers seem more like a coronavirus discussion than a monetary discussion, didn't it? I mean, he talked about it, wearing masks.
Well, I don't know if I would say that, but I do think he's paying attention to it because it's obviously it's going to affect our global economy, not only the U.S. economy but the global economy moving forward, and supply chains and everything else. So But hey, guys, I'm gonna pass it over to the team, but I want to say Paul Franco should be here. Paul, are you here?
Yeah, I'm here.
Hey, Paul. So let me introduce you guys to Paul Franco. For those of you that don't know Paulie's been working with me for probably the last 7-8 years, maybe something like that. Yeah, and I found Paul on Twitter. Paul and I have been friends on Twitter for 10, 11 years. And when you take a person like Paul Franco, who has been chipping away and living off of the markets for, as long as I've known him, and obviously before that, he's a guy that I love having on the team because he trades for a living. And with Forex Analytics, he's been in our chat rooms for ever since the beginning. He's been in my chat rooms prior to Forex Analytics, and he actually does the bias chart that you see here. He does one during the European crossover with a couple different assets in here, but if you have to be part of the Forex Analytics community to listen into him. But man, Paul Franco, he's in our chat room, and people tell you he knows his levels. He's the man. He's like, hey, watch it. Currency may stop here and reverse, and yeah, he's good. So
I am a
maybe,
huge fan of Paulie. I have to say,
so Paulie, maybe you can take over the charts and show people, how you come up with your analysis. And with that being said, I'm going to pass it over to you guys. I got to roll, but thanks everybody for tuning in with me today. And remember, after Paul Franco, Dale is bringing in Peter Goodburn, which is a great Elliottician. So you guys don't want to miss that either. Okay.
Good luck today, buddy.
Thank you, Blake.
Hey, thanks, guys. I got to run. So I'll see you on the daily roundup in 4 hours.
Okay, it is, Stel, while Paulie's grabbing the chart.
Yep.
Yeah, can you see my screen?
Yes, we can.
It is discount. Got it, Paulie. It is discount Thursday for semi-annual and annual plans with us. So if anyone's interested, so they could see Paulie every day, see Blake on the midday update, and be part of our community, if you send an email to Joe Perry.
I just put the email address on the chat as well.
So it's not on a 1 month, okay? It's on a 6 and 12 month membership. Joe will work out a great deal for you. So all you have to do is email him, say that you saw us on investing.com and you're interested in joining. Dale said there'd be a good discount. Okay, go ahead, Paulie.
Hey, Bob. Well, glad to be on with you, Dale. And I was listening to you earlier at the beginning of the show, and I think you had some good points. You were talking about Apple and Microsoft, and I think Google also, and they're actually down right now from yesterday's close. But I had mentioned here that I was going to go in and talk about the Nasdaq, where I trade actively on the NQ. And then also going to reference, which I posted a chart a couple of days ago for the gold market. And then also Euro cable in the chat room. We were trading those, and with the euro dollar, we were looking for a high, or at least that was our resistance level, was 18.14 yesterday. It was a weekly level, so that's about where the market ran out of gas yesterday. It was a little bit lower, but we did see some volume pop up real fast in the Forex futures markets, and right then, all of a sudden, the market just quickly slid. I think Blake grabbed like 20-some pips, and I don't know how much Amanda had grabbed, but they were quickly grabbed. I think Amanda was in the cable at the time. But I'm in accord with what you're saying. I think that, and I'm not prognosticating. I mean, I have my share of losses when you try and say, well, this is what I think the market's going to do, or this is what I think. But I will say that yesterday, even though Powell didn't necessarily give anything, he was verbally supportive. And I just think that at this point, the market's simply not responding the way we were when the Fed was basically saying, okay, we'll do whatever it takes, kind of borrows a line from Draghi, but essentially supportive. And we were seeing that these run-ups, whether it be the NAS or the SPOOs here, or to a certain extent, let's say with the Russell, I've got the Dow, but that's on another page.
Hey, Paulie, on that previous chart, go back to, what were those squiggly lines? What are those?
Okay. I use one of the things that helps me when I scalp around a lot is I use VWAP. And so if you can see here, this is the same day VWAP on the NQ, and look where they rallied up here. You can see here when yesterday, or in the Asian session, I shouldn't say yesterday, they were buffeting around this same day VWAP. And as we rolled back down, we came down here into some great support in here. Actually, I missed this and really ticked me off because we had actually dropped here in the morning. I was in the European session. You can see here, we stopped right here at 520. I'm like, doggone it, I thought it might make it all the way down to about 510. So I had a limit working there. Well, we went and rallied back up. You can see we had some pretty decent volume at the time. We rallied back up here, and you can see here where we posted a gravestone doji here, and I'll be doggone if that thing didn't come down there and go right to my doggone level. And I wasn't paying attention. By the time I realized it was already at the mid 520s, and I scalp around a lot. So I was like, well, I can't come in now. But we continued to move higher. And that kind of made sense if you think about it, because we had already come down here. We had some pretty good volume on this break here. And I like to use the volume in conjunction, even when I'm trading the FX futures. Like yesterday when we were in Powell's, right before I think he came on, the euro was above 18, and the cable, I'm not sure where it was because I wasn't trading cable. And I posted in the chat room, hey, I just saw some good volume come in right into the to the futures. And I guess about 2 minutes later, 2.5 minutes later, the euro turned around and dropped. Blake jumped out and he got out like about 25 pips, and I don't know how much Amanda got out, and I don't know who else was in there, but we were looking for
Paulie,
resistance.
I've been hearing more about VWAP. It's an interesting tool. Can you explain what it is?
Well, it's unlike sometimes you use a moving average, and what I do is I do use moving averages, and I don't use oscillators. I've used every tool and toolbox, and it goes back to the old adage, keep it simple, stupid. You find what works for you that plays into your trading style. Mine is primarily just scalping. I've said it before. I'm never going to be the guy that caught 300 pips, 200 pips, 150 pips. That's not my game. I can't be that kind of trader. I'm not that kind of trader. When I try to do it, it just doesn't work for me. I'm just a scalper, or just a very, very short-term day trader. But what I do use is I use the exponential moving averages here on the 30-minute, and that kind of allows me to set the tone as to which direction I want to be in the market overall. But VWAP is volume weighted average price. So as opposed to just a simple moving average, or let's say I saw one example was if you saw, let's say it was a 10-minute bar or a 1-minute bar, and the market traded at $50 and $100, and over the course, and you would average those out, you say, oh, it's $75. Or if it averaged 50 to 200, and you go, oh, the average is $100. But what it does, it takes in the amount of volume traded at a level, so there's greater significance at the amount of volume that's traded. So that's where this is going to adjust. So you can see here, as we rallied up here to same day VWAP, you can see here the market kind of ran out of gas. I did take a quick short. I was kind of frustrated because I had missed this low here, but I incorporate same day VWAP with also 2-day VWAP. And I try and play those together, where market, like I said, pretty much in Asia, we've been pretty much downhill, going lower. But lots of times you'll find that VWAP will be either supportive or either be resistance. And if we do keep challenging VWAP, obviously this was right from the get-go, and we can't get beyond it, and you break down, then I don't want to say it's a definitive thing, but you can pretty much play the percentage and feel that the market's going to then rotate lower. So that's how I use it. On the
Okay.
lower one, which you're mentioning
you.
here, is I can set the VWAP to significant low. So you can see here the low on June 28th. I
Yeah.
use that here, and you can see here that on the pullbacks, that the market found support at these two VWAPs. You can see right here. So when I try and use that in conjunction with my levels, then that gives
Interesting.
me or provides me a better percentage move. At least I believe it does, to help me, into a trade.
That's good enough for me.
But
If it
I am
works
in
for you.
accord with what you were saying. Is I do think we are vulnerable. I think a lot of people were really frustrated over the last couple of months. That of course, we've heard so much about the Robinhood traders, but frustrated where they'd say, "Man, this market, there's no way it can go any higher than this, or it can't go any. It's rallied too far." But and the Fed would come in and they'd just barely say anything, and then we'd move higher. But I think we're reminds me of the saying, "Past the point of diminishing returns." Well, I don't know about past the point of diminishing returns, but I think we're basically like the car that starts to run out of gas, and you step on the pedal and you get one little bit of a goose, and then finally the car just dies off. And to me, that's what if you look at this on a more closer basis, that's what it looks like is happening if you look over the past couple of weeks. You see how we're not really going anywhere, but we are starting to see divergences here, whether here's in the SPOOs. We're seeing really to a more greater extent is here in the NASDAQ. Now, today is going to be Lollapalooza of earnings. We've got Apple, Amazon, and Google. But my thinking is, and once again, I'm not a prognosticator, but at least going from the technicals, to me, it looks like it's just starting to lose its momentum at this point. So I'm going to be looking I always let the technicals do the talking, because every time I think I know more than the market, I get my head handed to me. But I let the technicals do the talking as far as the levels. And unless it can get this 10,755 on the NASDAQ is going to be key on a 2-hour chart. I like to use a 2-hour charts for my lengthy, intraday charts, as opposed to, let's say, a 4-hour. If you use a 2-hour chart, you got 12 bars in a single session or single day, as opposed to only 6 bars with a 4-hour. So I feel more comfortable using a 2-hour. You can see here we've got a couple little hammers here off of this bottom here, so we may be able to work up a little bit higher, and maybe that will be the path of least resistance as we go into those earnings. But I'm pretty much laying low until we get past the earnings, and then I think we are susceptible. We're even seeing the same thing, which I don't follow that closely, but we're even seeing the same thing in the DAX. And I think one of the reasons, although Powell, maybe he didn't lay anything significant, but at least verbally he remains supportive. But my thinking is what's going to grab the bulk of the headlines, and I'll move on to the other markets. But just to preface that, is that I think this haggling that we're going on between the Democrats and the Republicans as far as the continuation, I think and now they've already, because they've missed whatever the deadline is, there is going to be a break in those unemployment benefits. So I think at this point now, and you're already seeing the market already kind of weakening. You can see here we were doing pretty good, and once we got past 755, we really started to ratchet lower. We rallied back and we came back down, and now we're going, I wouldn't say each high, but we're, this one's even lower now here. So I think we're open. And so if you get any type of news, i.e. they continue to haggle and it looks like nothing's going to get done, I think at that point it's going to be, it may behoove many people to say, you know what, I'm going to take some money off the table. Why the heck am I going to have stuff at risk? And I think that possibly, depending on how things work out, as early as next week, we can probably see a pretty good little pullback in the NASDAQ and the SPOOs. And I think you're seeing that across the board on some of these. One of the markets that I was going to go on and talk about, and I'll get to that real quick, bear with me, was gold. And I did share this, and I was actually looking at the August, but moved over. December's the front month. But you can see here, I can expand the screen so you can see a little bit bigger. We do have what I showed here was a long-legged doji. Now, look, Powell was very, overall receptive yesterday. So if we wanted to take off, we could have really mounted. But I think that with gold, and I'm not bearish gold in any respect whatsoever, but look at this move that we've had. How far we've gone and rallied there, essentially $600. And my point is that I think it's susceptible. And for those that either may or may not know, is that with a long-legged doji, generally what it means is if you look at this bar in particular, and that's a day, so it's not like an hour, a half hour, whatever. What it tells you there is in this long wick, the bears don't have control, the bulls don't have control. We're just, we finished dead middle. Now, obviously, we finished stronger, or not stronger, but we finished higher yesterday. But the point is generally what happens is with the long-legged doji is then what has been the prevailing trend? Well, that's pretty clear and obvious. The prevailing trend has been up, up, up and away. But generally what happens in that situation is you're vulnerable then to a pullback. Now, what Powell said was constructive, but we didn't turn around and take off. Now, we did finish a little bit higher, and I can go on and move it into bear with me, move it into a 2-hour chart. And let me go on in, actually, I'm going to go on and grab my 2-hour chart from my other program here, Ninja. And I was looking at the time, I was looking at the August, which at the time was trading $20 low at 1965. But yesterday I was saying in the chat room, I go, because I was looking at once again, I look at the 2-hour bars and I always look at the closes. Some people want to put their resistance levels at the high and the low. And I always say, how many people sold the high and how many people bought the low? I go with the closes because to me, that's put up or shut up time. Lots of times you'll see that in FX. You'll see it also even in the indices. You're coming up to the close of the hour and the market's working higher. They just keep pressing it because anybody that's short, they'll know that if it's going to close at the half hour or the hour, whatever they're trading, they're going to have to get the heck out of Dodge and get out of the short. So the market will keep pressing. So to me, it's always about the close because to me, that's put up or shut up time. So at the time, basically had the same setup, but it was August. Obviously, we rolled over to the December. And I said, hey, look, the resistance yesterday was going to be 1965. Obviously, December's 1985. I said, hey, look, it's about the resistance at 1985. I go, how we're going to go in and close? Well, look, we jumped above it, but we certainly didn't close above it. And where did we go from there? Well, we went down. I mean, down, down, down. Obviously, we've had a pretty good move in gold, but look how much we're down. This was already $25, but it's based on this 2-hour chart. Now, it's not that I'm so incredibly bearish or anything, but my point is we've run so far. And if you remember, before gold really started taking off, we would see these wild runs when the equities got themselves in trouble. The thought was, you sell what you can, and people would end up dumping their gold or, gold contracts to go on and, pull in the cash because they were taking a pretty good lick on the equities. My thought is that we've come so far. At this point, it makes sense that it would take a breather. And if we do see trouble in the equities, and once again, I'm not prognosticating, I'm just saying, let the charts talk for themselves. And you tell me that, ultimately, if you look way back, it's still bullish. But if you look at it, you'd say, that market looks like it's kind of running out of gas. I mean, it may have to pull back and get a breather. And I think that right now, so what would be the catalyst? Well, you can see here that the Republicans and Democrats are arguing, and the unemployment benefits of, they're going to skip. They're not going to match. So there's and Powell's already given everything he could. He hasn't taken any further action. We may see further action. There's a thought about some dot plots being reconfigured on this next meeting. But for now, we're just not getting any more bang for the buck. So to me, it looks like it's susceptible to a pullback. And I think that if you consider from where we are, that might be an okay little pullback here in the NASDAQ or in the SPOOs, or if you're looking at the at the Russell, same thing. They all seem like they could go in and pull back, and we have a pretty good little catalyst. So hence my thought is we could really end up pulling back here in gold as anybody that came in and would end up buying too late themselves may find themselves, with their stops below 1926, and they just get taken out with, throw out the baby with the bathwater, and we may just see that. And you're seeing it right now. I'm looking at the 2-hour chart. Bear with me, and then I'll get into the euro and the cable. You can see here we had, once again, I love the 2-hour charts. Look at this. One of my favorite setups, a gravestone doji. Looks like a gravestone. And look, we turned around and we sold off, a good chunk of change here with the gold market. And that's, once again, it's on the 2-hour chart. Well, look in here. You come back up here, you got a hanging man. Okay. Same thing. We're real stretched up here at the highs. It doesn't close above there, and we start rolling over. So my thought is, not that I'm so bearish, but I think that it's vulnerable at this level with gold. So potentially this thing could, if the wheels come off the caboose in equities, and once again, not prognosticated, I'm just saying let the technicals do the work. But I'm saying is, I think Blake mentioned 1926 or 25. He's right around there. But my thought is there'll be a lot of people that ended up buying on the way here, and some of them are going to be like, well, I'm not going to let it turn into a loss. And there'll be some people that got too excited this week and got long up in here, and before you know it, it's going to, kind of like run like a little cavalcade, and before you know it, we start tripping lower, and people are thinking, who would have thought we'd have pulled back? Yeah, it's a buying opportunity, but we'll end up, dipping pretty good. So that's my thoughts on gold. Going back, I'll go in and take a look at the euro. We were looking. The euro's had one heck of a run, but we were looking at 1814. That was my bias chart resistance for yesterday, and we did have some weekly levels, and I'll go into that. And that's where I came up with the 1814 was a weekly level that we had here. There was another one at 27 and one at 54, but I like that 1814. And we just poked our heads just above the 18 level. And then that's when, as I told you, one of the things I like to use is even if I'm trading, I trade the futures as opposed to the spot. I used to trade the spot, but I like the futures because lots of times you'll see things. And I saw that yesterday when the euro was trading above 18, and all of a sudden it wasn't a huge amount of volume, but a pretty decent amount of volume that came in right then. And I posted in the chat room, hey, look, we just saw some pretty good volume coming into the euro, and then turn around and next thing you know, 2 minutes later, we go on and shed 25 pips in the spot. And I forgot how much cable did. But my point is, I think we are a bit stretched here in the euro. It's kind of like the same thing with gold. We've run so far, so fast that I think that it is susceptible to a pullback. I'm not saying how much it's going to pull back, but I think we may run into the same thing, although it's same thing has kind of lost its momentum, which is buy the dollar. The dollar goes bid if we see the equities get into trouble. I think it will go bid only because it's oversold, but it's not going to be as lasting. So we may find ourselves, like I said, pulling back here in the euro a decent amount. I think today I'd have to look my own bias chart. Bear with me if I have that here. Take a look here at what we have for the euro for today. And really that encompasses, lots of times our bias chart is set for very short-term levels. Let me try and pop this up a little bit higher. There we go. So we're looking at 1680. Potentially, we're at 1747, but if the dollar gets going, yesterday in the dollar, our bias chart support was 93.17, and the low for the dollar index was 93.18. So we missed it by one tick. I mean, and all I do is it's nothing special I'm doing. I'm just going with the levels. But that kind of played into with the euro because yesterday we still have it for 1814. And I think the high yesterday in the spot was like 1804 or 6, something like that. But once again, I think we've come so far so fast that we're susceptible to a pullback. The only one thing that we do have a little bit different here is going to be with the cable, and we're going to move into that. The bias chart we have for today here on the cable, I do have a level here at 30.38. And I think the high today has been like 30.26. I'm not doing anything with the cable, but one of the things that we do need to focus on is going to be the weekly level. And once again, always like to go with the closes. Obviously, this thing's on one heck of a tear. But if you look at there's multiple levels here, but when I'm looking at the most positive close, and you've got two of these that run almost concurrently right there, and it's at 30.43. So obviously this thing is on a tear. You can see here it broke a trend line, and it's blowing and going. But if you were looking to make sure you lock in your profits, any moves to 30.38, I would go in and do that. I know Blake's looking for much bigger moves. That's not my game. I don't try and look for huge moves, and I'm not even trading the cable. I was trading it a little bit, but I haven't traded it now for about a couple of weeks. I just kind of would day trade it. But if you're looking for resistance, I'd say 30.38. But if it's a weekly close, wow, 30.43. But I think what you may want to take into place, and once again, I trade just on the technicals, but I do like to, when we do the European crossover webinar, we will go in and pull out a couple of stories off of my Reuters feed, basically setting the tone for the day. And the one thing that I would kind of once again look at, remember I told you, is that today we have, as far as in the NQs, kind of like a lollapalooza of earnings. We do have Amazon, Apple, and Google. And as you mentioned, some of these equities are starting to go on and diverge here. I think that potentially, and we'll take a look at those right now. You can see here, Apple, we did go as strong as you did, but look how we are now before the open. And the same thing here in Google. Everything just looks weaker. And remember what happened to Intel? Well, we finally got back above 50, and look here we are heading south of the border again. So everything just doesn't look good anymore. Here's Facebook, same thing. Look how we closed yesterday, and look where we're at right now. To me, it just feels like, and it's almost going to be kind of like a sell it. Now I don't know how the earnings are going to play out. It's going to be wild as heck, and I've tried to not trade NASDAQ this week. Probably could have stepped in a couple of times because it wasn't as wild as many thought it was going to be.
Maybe fade good earnings, huh, buddy?
Huh?
Maybe fade good earnings.
That's how I'm going to go and play. Well, I'm going to as I said, I'm going to let the technicals do the talking. I always get myself in trouble when I don't, but I will be looking. You can see they're already weak here before the open. Apple, Google, Facebook, obviously Intel. Look, we're just blowing and going to new lows again. So everything here's Tesla here. Don't really pay too much attention to it, but it garners a lot of attention. But as I said, it just looks like we have a catalyst at this point. I'm just going to wait to learn it, and I'll let the technicals do the talking from there. But that being said, NASDAQ and NQs and equities, the SPOOs, they certainly just don't look in as good a shape right now at this point. So that's my take on that. So I know that we're almost up to your time for your interview, but I don't know if there's anything else you want to comment.
4 minutes, buddy.
Huh? Which day?
You have a few minutes.
Oh, okay. I think Blake mentioned about the dollar CAD. Let me take a look here.
So I just want to say to our viewers that, Jack Schwager, in an interview I did, said, I asked him what's the most important advice you could give a trader. And, Jack Schwager wrote Market Wizard, so he probably knows a little bit about what's good for traders by interviewing legends. But he said, find a trading style that fits your personality.
That's so true.
So Paulie found it. He's a scalper. He said he's not, he's not looking for huge long-term moves. I assume you do a lot of day trading.
Oh, yeah.
And, if that's your style, Paulie's levels are excellent. And if you're a scalper, what are you looking for on, say, an average currency trade nowadays, Paulie? 30, 40 pips?
Yeah, well, generally I scalp a lot. I trade I'll trade the NQs.
Yeah.
I was trading the SPOOs, but I actually like the movement in the NQs, and that's why I'll have those equities in also playing in there at the same time. And sometimes I'll see, okay, something's starting to break, and I know that I can go with it when I'm looking at the volume. I trade that, and then the euro, and to a lesser extent the cable. So I've narrowed it to not trade as many markets because I am scalping. But as you mentioned, we had a little bit of extra time. This dollar CAD has been holding up really well. It held the 33.40 in the daily again, and we've actually pushed higher. Actually, we had our buy chart resistance today at 34.23. Well, we're just a little bit above that, but the next key level, looking on the 2-hour chart, would be as if this thing were to get above 34.38. But we've had a pretty good run, so they might see some people, take a little bit off, but it's held up very well here in the dollar CAD. And it looks like we're out of time now.
Well, if you want to learn to be a good scalper, join our community. Again, Joe's email address is there, and you could hang out with Paulie and scalp with him. And I believe surround yourself with traders that are better than you, and you'll rise to their level. And like Blake said, Paulie makes a pretty good living trading. So if that's what you want to do, you should hang out with him. And I appreciate you being here today, filling in for Steve. I can't say anything about Steve because then he'll pop up like he did yesterday. I was, telling Greg, yeah, it was nice to have him here, and I got to ask the questions instead of Steve, and then all of a sudden Steve's picture, his video was on the screen, heard me talking behind his back. He's probably getting ready to do it again. But Paulie, respect, brother, and thank you very much for showing your stuff.
Okay,
today.
great. It was great joining you, Dale, and we'll talk to you later. Bye.
Okay. All right. So, Peter, I'm going to get you set up here. Okay, Peter, I'm asking you to unmute. Welcome back to Face for, I don't know, the 20th time.
Dale, can you hear me?
Got you loud and clear, Peter.
Great.
I don't know how many times you and I have talked. It's almost like,
Yeah, a few times. A few
Yeah.
times. Yeah.
And what a great time to be. It's always a good time to talk to you. So if you share your screen, we could move into what you have on your radar and what you're paying attention to. I also want to acknowledge, Peter, that your last interview on Face and then the Trading Summit, I read your stuff. The last interview, you were very constructive. Metals, more so silver, that it had bottomed after that washout in the COVID washout. And I believe that silver even exceeded your expectations, which was a big call when it was trading, $14 of 22. And that was like a long-term target of yours that, during this inflation cycle, we'd get 22. So with this kind of burst, let's see, you have S&P's up. Okay, we'll get to there. This kind of burst, does it change and make your outlook going forward more bullish than it was, say, 3 months ago?
Well, I mean, it's a good question, actually. I'm reviewing silver right now because you're right to say it. I mean, I'm putting up a chart here, if you can see this.
Okay,
everybody.
yeah, see, that's the one I saw. You're looking for 22.53.
Yeah, I mean, it was, of course. I mean, you don't expect it to happen in 4 months, do you, really? I mean,
No, I mean, that was, that's right. That was, and time-wise, it was going to take.
I mean, it was a zero forecast result in time, and of probably 100%, or thereabouts on terms of price.
Yeah, I think Elon Musk put one of his rocket ships on the bottom of a silver bar.
Yeah, that's right. He must have done, I think.
Had some jet fuel. So
yeah.
Anyway, if you rode it to 22, you did okay.
So we did really good on this because actually we've got quite a few clients specifically on the institutional side tracking silver with us, and so we do watch it pretty closely. I mean, silver is a bit close to my own heart because I was trading this in the late 70s and during the bunker hunt time, and so when you build up an early affinity like that, well, you remember it too, and you were trading on the floor then, and I was.
No, I was actually in an office in Beverly Hills.
In Beverly Hills,
commodity broker.
Is Beverly Hills like the Bronx?
Beverly Hills is kind of like Rodeo Drive and things like
that. Pretty rough area then, right?
But it's actually a bad memory because when you have customers, you can try and talk them out of doing something, but it's their account. You have to put the order in. And I actually, back then they had a silver coin contract, Peter. Mm-hmm. And the guy got short silver coin bags, and silver was locked limit for, I don't know, 5 days before they changed the rules of liquidation only. And he went deficit. I had to chase him around or eat it. So that's what I remember about the silver squeeze in 1979.
Wow. That sounds. I mean, it sounds a bit like the oil fiasco that we had as well.
Yeah, I had to learn a new career from being a trader technician to becoming a collector.
Basically took delivery.
Anyway,
Yeah.
all right, let's get out of the time machine. And,
Yeah.
all
Okay.
right.
I mean, we can come back to silver later if you
Yeah,
like.
let's do that because.
I mean, it's a good subject, but
yeah.
I think some of the things which, I mean, you know, we tend to look at a whole right across the asset class. So for those of you guys watching today, if you're not familiar with our work, you know, we specialize in Elliott Wave, and we have, a very sort of cross-section look at all the different asset classes. We're particularly good on correlations. Because I think it's very important to sort of cross-correlate. I mean, there are things called Elliott wave idiosyncrasies, and we had a couple of these recently. And I mean, we're not to be burnt by them, but you know, if you do make a cross-correlation, or if you have some particular Elliott wave pattern that doesn't look quite right, you can normally sort of derive exactly what it's supposed to be doing and where it's going to. If you just take a look at comparative indices, or even sort of different asset classes which have either strong positive or negative correlations. And this gives you a bit more balancing in terms of forecasting, and of course, you know, it's going to help a lot in your trading. One of the most obvious things to me that occurred during the COVID sell-off in March was the fact that, you know, we had a complicit sort of synchronization across the board, in particular stock indices and commodities. And they all gave us buy signals right at, you know, within a few days of those lows. And we published them on Twitter at the time.
I remember.
Yeah, I mean, it's just the fact that I know that for those of you watching, listening, if you've seen a lot of Elliott wave work, you know, it differs, and that's where the criticism comes. But really, if you're doing a thorough examination right across the different asset classes, you should come to really the same, you know, guys in this profession should be coming to the same conclusions, really. My take on this is that we had an intermediate fourth wave correction, you know, which basically began here back in January 2018. And it's an expanding flat. We finished here into the March lows. And we used a lot of fib price ratios to actually augment and confirm the counts. And, you know, if we just simply take a couple of ratios, I'm using some subliminal ratios to define exactly where these lows should be. And you can see, as I've clicked, they project these levels. And we had them pretty much posted up at the time when we were leading into that low. And you can see the 38% area comes pretty close. I mean, that's certainly within the confines of wave C ending an expanding flat pattern like this. And of course, you know that this is ending a fourth wave in the larger picture. And I think I've got the larger picture somewhere here. Actually, this upside target, Dale, you're probably familiar with, because every time we've talked about it, we've normally talked about 4,400 for the Dow, for the S&P, haven't we?
For years.
For a long time, yeah. And actually, that target we had back in December 2014 in our annual report. Up until that point, we were talking about a number up at around 2140.50. And then when we got to 2014, we could see that the emerging markets weren't quite correlating. And this was going to extrapolate into a much broader five-wave pattern. And that's what we've had since, up to 4,400. And that's equivalent to the Dow, you know, where for about 40, between 41, yeah, around averaging 41,000, yeah, something like that.
Yeah, and we talked about at the trading summit some potential time frame. Okay, we'll give you Christopher. We'll give you Peter's. What's your Twitter? It's at Elliott Wave _.
I've got it here. I knew I'd get a question like that, so I've opened it up already, I think. Let me just find it. Oh, the menu's covering it up. Hold on. Ooh.
Yeah.
Let me just see if I can click a tab.
I mean, I have it. Okay, so it's at Elliott Wave _WTI.
Okay, thanks.
ELLIOTT Wave _WTI. That's Peter's.
Thanks for saving my life.
I can tell how active you are on Twitter.
Sort of,
you have to look up your handle.
Yeah,
You're too
no,
busy doing
the
analysis.
guys are doing this and, you know, are really helping me with the technology side of things. You know, I have enough to forecast the market. They do their job, I do mine. That's the deal. Anyway, okay, so yeah, this is a fascinating thing. And you're talking about timing. You're right. You were just thinking about timing on the peak. And I looked at this 94-year cycle some time ago. It's this one here.
Okay.
And we publish this twice a year in our annual reports and our mid-year reports, which we sent out videos on our mid-year reports just recently. If anybody's got any interest on those, you know, just text Dale, and then I can tell you later how to get that. But this is a really important one, and it's a very long-term Dow chart, and you can see all we're doing is simply connecting the peaks in this 1835, 1929 era, and projecting it along. And I think you know, as a generic sine wave, the cycle is okay to do that. This is the correct way to do a cycle, by the way, rather than sort of connecting alternate sort of high lows. A cycle is defined by corresponding peaks or corresponding troughs, and not alternation necessarily, unless it's centrally translated. In this case, the central translations, which happen to be the sort of the midpoints here, the lows, you can see don't coincide with major lows, but they do coincide with thrust to the upside. So you have to figure these things in. And
because I think you know, when I was a kid, right before the Civil War, that was the deepest recession in U.S. Depression in U.S. history. I think it was at least 10 years before we got out of it.
This one, yeah. You were just a young boy then, right?
Yeah, I was.
You were in your Pampers,
spying for the Confederacy back then.
Well, if that's true, you're doing pretty good, actually.
They tore down my statue.
Yeah,
in Illinois.
Oh, right, okay.
Yeah,
you better tell me what your secret
Colonel
is.
Dale Pinkert.
Colonel Dale Pinkert.
Anyway, so that means, gosh, you know, we have, you know, the preppers, Peter, and everyone that's worried about, you know, what's going to happen. Like, you know, we're seeing social unrest here in the U.S. and will there be an election? You know, I think our president just made a statement. Maybe we should delay the elections. That's what someone in the
really
is saying, until it's safe, or until the polls change. So with all of this going on, you would think a lot of people that, you know, have been preppers for years are, you know, like, we're right here and you better get ready. But what your work is saying with that sine wave is we have 3 years to get our 2-3 years left to really, you know, get our plan together to prepare for when economic conditions and asset prices begin a generational bear market. You know, that's good news, because I tell you what, it feels like it should be now. When you watch,
I agree with you. I mean, if you put the blindfolds on and you just listen to the news stream, you know, and this is the reason why, of course, the fund managers, I don't know whether you get to follow some of the sentiment and tracking of what the big investors are doing, but you know, when we hit the lows in March, all the way up, we were seeing huge short positioning in the S&P futures. If you looked at the commitment of traders, you suddenly see huge short positioning during the recovery during April and May. And we went to, right at the end of May, we went to I think pretty much an historic low short position in the net speculative short positions on the COTS, on the commitment of traders reports. And then suddenly, just before this drop in early June, we suddenly had it shrink dramatically. There was a huge amount of short covering as the market sort of started to drop. So as the market dropped...
this rally exceeded my expectations. I was thinking 3,100 was going to contain it. I was surprised to see almost 33. So,
well, actually, 3,100 to 3,200. It's a lot when you're trading it short term, but on here, it's a thumb print away, isn't it? I mean, it's not that much. And so you'd be forgiven for thinking that. I mean, certainly I was in that camp too, thinking, you know, this is generally getting top heavy. But of course, if you just look at the S&P in isolation, you're not really going to, you know, you can be misled a little bit into the timing of when you should be putting in some shorts. I mean, again, take a look at the Russell 2000 or have a look at the, even the Dow sometimes. I mean, we've seen some interesting divergence on the Dow. This rally from, for example, mid-June up, it's a nice zigzag. Ordinarily, I wouldn't have expected it to have even broken back above the June high, but it did marginally. It didn't invalidate the zigzag, and that's why we're on a sell signal right now. But I can tell you that the Dow never broke this high, and those things are really important to watch if you're trading. You may not trade every single index that you're analyzing. Let's put it that way. A big mistake is people saying, "Oh, look, I don't follow that. I'm only trading the S&P, or I'm not following those other indices. Leave me alone." But actually, you're missing a lot of analytical detail if you're willing to eliminate those.
Yeah. How about the last 2-3 weeks? If you weren't watching NASDAQ 100, you would not have noticed the underperformance of NASDAQ. It led all the way up and recently has begun to underperform. So,
Exactly.
that's why you have to look at more than the S&Ps and the Dow. And, I always want to be long the relative strength leader and short what's displaying weakness. And the last couple of weeks, it's been NASDAQ.
That's right. Yes. There are other clues as well. I mean, for those of you watching or listening, you're sort of, have a look at Europe. Europe's been very, very interesting. I mean, okay, before we just take a look at that, this NASDAQ, I think, we should be dropping down, and we should ultimately break this low, this mid-June low. I think we've got this sort of pinned down as a sort of a 1-2-1 sequence, and we should get some downside acceleration there. And we need to balance this whole move because we haven't balanced at all. I mean, if you think about it here, we've got a bit of a correction. These are very similar in terms of size, but we've seen nothing to compensate or to rebalance the entirety of this move, and it's long overdue for a correction. So we need something that's going to break down. And I mean, even if you're using standard technical analysis stuff, you probably do something like this and say, well, look, breaking it down, the momentum's lost.
Right.
So you should be probing to the downside, really. I mean, that doesn't mean to say that you've got to trade short blindfolded without stops, but at the moment, I'm certainly short these indices. When we're talking also about divergences, even if you're not trading Europe and you're located in the US, or you're trading US only exclusively, take a look at the Euro Stoxx 50. I mean, this did huge percentage gains from the March lows, mainly because it's very oversold before that. And that's why at the moment, if you look at some of the latest figures from the fund management groups, you'll see that there's huge money being poured into European equities at the moment. Since
a lot of that could be dollar weakness.
I think that's the reason for it. I do believe so. I think a lot of the dollar selling is because there's money being pumped into European equities,
assets,
and it's been mainly because it's been really downbeat. This swing up again, it's emulating what we've just seen on the S&P. It's a nice zigzag rally, and this is starting to head down. And you can see that this report we updated on Wednesday evening, and it's already starting to accelerate down again. And this is why I think it's going to be tugging and pulling down on the indices to some extent. The DAX.
So do we get? So just a little segue here, Peter. Do we get a bid in the dollar during this correction in the S&P?
Well, that's a good question. I sort of I'm a bit careful about the dollar at the moment because the bigger picture is definitely bearish.
Yes.
And when I was looking at the dollar last week, I figured that as soon as the stock market starts to accelerate down, we're going to go bid on the dollar. So I was,
and we didn't.
And we was looking at this, and and this was Friday's update, and I was looking at it and I was thinking, well, actually, if this is declining from March into a 5-wave picture, which would actually fit, in an inverted way to the stock market having a correction down, we should be really we should be demonstrating a lot more upswing from this rejection low. This is a 61.8 correlation ratio of 1 to 3, and just for everybody's interest, if we simply take a 61.8 correlative ratio, by that mean I'm measuring 1 to 3, subtracting from 4, that 61.8 ratio is a very high recurrence ratio for any 5-wave pattern where wave 3 generally is extending. Only in those occasions. But this is, this hasn't really, when I see this test, it should really be responding and rejecting to the upside. So I'm a bit concerned about that. I'm just wondering, even if the stock market's declining, that we just don't get any traction. And if we don't, then I think the next downside target is here. And that means the fifth wave will be an extension and we'll end up at 91 figure.
Okay.
So I'm watching that very carefully at the moment.
All right.
I haven't made up my mind on that one.
Okay. You know what else hasn't made up its mind? And I know you had a long-term bullish bias on US dollar yen, and it's taken out some support levels recently around the 106 level. And, I kind of correlate this to what's happening with the yields. And I do want to get to yields, even though the EKG looks like a comatose patient. Okay, so we're getting close to where you think wave 2 might end, around 405. Interesting. Okay.
Yeah, that's right. I mean, this downswing. Here's the March sell-off, the COVID sell-off.
See, so the Dixie took out that low on the March sell-off, and the yen is putting in a higher, US dollar yen's putting in a higher low above the March low.
I think
so
the dollar yen,
to me, there's more inherent relative strength in the yen than there is in the dollar. And okay, there you go.
Well, yeah, I tend to think that you gotta think that dollar yen is not like any other sort of dollar pairing. It's all about risk on, risk off.
Okay.
And if you take a look at the dollar yen against say the US 10-year Treasury yields, you get positive correlation. So
I believe that.
Yeah, I mean, it's very, very, it's very, very clear what's happening with those. And also, if you take a look at the Nikkei,
I don't know, you have to make an
index.
appointment to trade them now. I mean, don't you? I mean, with what Paul did in March, coming in, I don't even know if he, spent $1 on corporate bonds, but the way bonds are trading right now, I've never seen them thinner.
Right.
I've never seen tighter ranges. Like on the 10-year yield, it's like ... Like I said, it looks like an EKG of a someone in a coma. And then there's that old Wall Street expression, never sell a sleeping market. And if there ever was a sleeping market, it's yields the last 3-4 months of going sideways. The universal thought is lower for longer. And I look at your forecast for the yen, and if that plays out, the big surprise is going to be higher yields. I think that's would be the most unexpected event in the market, would be higher yields, Peter.
I think you're right, because absolutely. Because actually, I mean, that ties in with gold, doesn't it? Because if you read all the gold analyst reports recently, and we've had tons and tons and tons of my email box is full of gold at the moment, reports.
Right.
And all the analysts are saying, extrapolating up and going crazy. I mean, yesterday it was, there was analysts saying, well, if we use a 7 times multiple of the low in 2016, that means that we're going to see $8,000 for gold. I mean, come on. I mean, please. I mean, I'm bullish for gold, but please, I mean, let's get realistic. This 10-year yield I'm showing really because of the pattern correlation with dollar yen. You can see that here's the low for dollar yen in March. Here's the rally, and you can see the same, zigzag downswing. If I just toggle back, you can see here pulling down. Can you see the same type of zigzag pattern down here? And I think you're right. I think the pain trade for the bond traders will be a massive sell-off in the bonds, yields trending up. We're not quite ready to do that yet. We've got to get down to, I'd like to see this correction finish from March, and that's where
10 bips away.
Yeah, it's not much now. I mean, it was a lot, sort of back in June when we were at 95. It was a brave call that we made down at the time. But that's looking as if it's a done deal. The thing is that when yields tend to trend up, you tend to see there'll
be opportunity costs for gold again.
Well, the big question with the analytical reports, the analyst reports in gold, is everybody's sort of said reason why gold's going up is one thing only. low interest rates
Right.
in perpetuity, pretty much.
Right.
I mean, the Fed, even their guidance, have said, look, we're not doing anything until we come back from holiday in 2021. So,
Right.
you can understand why the markets are feeling comfortable with that issue. But all I can say is that the Fed don't control the long end, or are they? I mean, there's been talk that they might try and dip in like the Japanese have done to try and control the yield curve. But if market forces prevail, I think they're going to find it tough to do that. If we get through the next correction down on the equity markets, I've got a 12% drop on the S&P that I showed earlier.
That's when we should get this next drop in yields to your 44 level.
Yes, I mean, the timing here, I don't know whether this will occur at the same time that the stock market bottoms. That might sort of flatline for a bit if it gets down here. I wouldn't expect ordinarily a break below the March low. That's not in my vocabulary at the moment. But even so, this would suggest that the yields would start to trend up later this year in a very significant way. And what is that going to do to gold? Well, it's going to, if everybody's pinning their hopes on gold continuing up at this pace on the basis that we're going to see a prolongation of lower yields, I think you have to rethink that idea. That's going to be significant. And coming to gold, I'm not sure how much time we've got, but
no, go ahead. Why don't we wrap it with gold?
Yeah, okay. I'm just going to show you a gold forecast, which I posted on Twitter the other day, because when I saw a 3,500 forecast for gold at this juncture, I thought it might be a good idea to remind what we've done in the past. This is what I posted. This is the chart I posted on Twitter, and it was a gold forecast I did back in June 2018. So we're talking about, just over 2 years ago. And at the time, gold was trading at 1256. It was coming down. We were forecasting this as a horizontal flat pattern for those that you familiar with Elliott wave. And we said, we'll get down roughly to this area here, and then we're going to start this big uptrend for primary wave 3. And the targets were 2035. Well, it's interesting because there's a bit of reverse engineering going on to get that number. But of course, 2035 isn't that far off from where we've been even yesterday or overnight.
Yeah, right.
We've been up to 1980, which is, a few fingernails away from this 2035 area. If I show you the real-time chart on gold, you'll see how the reverse engineering works with this, because basically what we've done is we've assumed that wave 4 will be a 38% correction, and the fifth wave, this target at 24.72 is derived from our very long-term targets, which we did through fib price ratios going back to the Great Depression lows when gold was at sort of sub $35 an ounce. So we wanted to maintain that as an upside target. And then what we did was we assumed that the fifth wave would be again a 61.8 correlative ratio of 1 to 3. So we've gone like this. And if you reverse engineer, that means that the target is 2035, 2040. So if gold hasn't already hit a top, which it might have done, I'm short a little bit, and I'm prepared to sell some more on a scale-up basis. Then this market is primed, ready to come down pretty soon.
You did it again, my trading warrior brother. Great content, and for people that want to continue to follow your work, you want to show them your site.
Oh, thanks, Dale. Appreciate that. Anybody who would like to, by all means, come and follow us at Twitter. And Dale gave you the address before, so I think that's here. And we'd be more than welcome to welcome you to our Twitter accounts. And then if you'd like to subscribe, this is the front page of our homepage, wavetrack.com. And if you go on subscriptions and go there, first page is our Elliott Wave Compass report, and this is our entry level for a very thorough, concise report which we publish twice a week, and you can log into this online and view the charts online, or you can just download the PDF document once you've logged in. And we're covering all the major stock indices in US, Europe, and some Asian stocks. And on the currency side, we're doing euro dollar, we're doing dollar index, British pound, dollar yen, Aussie dollar, and even Bitcoin for those that are interested in that. And yeah, you can subscribe. It's $39 a month, so you get two reports per week. And you can always email us if you've got any questions, because we're always happy to answer them, because there's a lot of detail in those reports.
Peter, thank you so much for coming in and giving us some great market concepts to keep in our market memories. Look left on your charts for the market's memory. My memory, you know, it's still okay. I mean, I did remember 22 silver, so
absolutely.
I can remember trades, and I can't remember how to find my way home. I get lost in my own neighborhood. So anyway, Peter, I really appreciate your work. I respect you, and thank you for coming to edify the FACE community today. Hope the pips just keep raining down upon you, brother.
Thanks very much, Dalen. A pleasure to be with you and everybody today. Thanks a lot, everyone.
All right, everyone. Peter Goodburn, that's a wrap. And we'll wrap up the week tomorrow. Remember, don't just count your pips or your Krugerrands or your bushels of wheat. Wheat looking pretty good. Count your blessings, and we'll see you all tomorrow. Adios. Thanks again, Peter Goodburn. You're welcome, Cedric, Monica, Brock, Barry. See you guys tomorrow. Don't forget, if you want to join, send Joe an email. He'll give you a deal. You're welcome, Yosh.